Welcome to Markets Now. I'm Michelle Rook along with Shelby, Risk Management Commodities. Grains leaning lower except for a few of the wheat contracts, but even those are off their highs. And in the livestock futures, cattle mixed after a little strength early on. Hogs are back lower. And Chuck, let's talk about kind of the pressure that we're seeing, first of all, in corn and soybeans. How much of it is profit taking versus this risk off that we're seeing in some of the outside markets?
I think early in the day when the markets weren't off so hard, it was probably some profit taking. But when the jobs numbers came out, kind of set the market in the mode that recession's more likely. We've seen the money flow towards the gold and silver and kind of risk off in commodities. So it's kind of two pronged attack on the downside here as those two came together and we're kind of down to lower end of the ranges now.
Yeah, and we've had a pretty good run here in both corn and soybeans, especially in the old crop categories. We've also probably hit a bit of chart resistance here, though, haven't we?
Yeah, it seemed like a logical place that the market was going to have a correction. The other thing, we are closed on Friday, so there are probably some traders in the market that decided, well, this is a good reason to move away from the market. So that's probably happening maybe a day earlier than you would have thought, but they had reasons. And a long 3 day weekend in the environment we live in and the way the world uncertainties that seem to be a catalyst to help move money out of the market too.
Yeah, and then we have some forecasts maybe looking just a little bit more favorable, right?
Yeah, for certain areas of the country, it's supposed to warm up. Allow some drying. They'll be able to see some guys get out in the fields. Some of the southern Illinois, Indiana farmers that are far enough south and have lighter soils might even see some planting next week. The northern guys, though, with the snowfall and the cold temperatures they've been experiencing, probably not going to see anything for quite a while there. So it's a little bit of weather, a little bit of combination of multiple other factors that are coming together today that make not such a good day.
Right. And one thing that is going probably, I guess I thought maybe would have been more supportive is the fact that wheat ratings were only 28% good to excellent nationally yesterday. That's historically pretty low. And wheat got a little bump on that, but boy, has not been able to hold on to that much.
Now, one thing we haven't had very good exports in wheat. The other factor we're fighting as producers is the funds are heavily short wheat. They seem to be able to maintain that position. Nothing's come along at this point to really kind of root them out of the market. So they're the heavy hand there, and they bought back today and sold a higher market.
Yeah, we continue to wonder why the funds just keep relentlessly pushing that market so short. What about though, the fact that you can't dip too much lower here in these markets, especially on corn and soybeans, before you start to see some end user buying come in?
That's the positive side. When they step in and buy, the basis is pretty good. Uh, Also, we've seen world buyers step to the plate. So those are supporting factors. Also, if we're going to have inflation, which we are, and it's going to continue, how low can grains go when you consider and factor in inflation? Those are supportive factors there too. It's just we can't seem to get a nice up move going that producers are looking for, maybe to offset some risk and make some sales.
No doubt. Okay, let's move over to livestock. Cattle futures started off a little stronger here this morning. Obviously, the pullback in corn is helpful, but also yesterday, I guess I'm curious. We kind of scored some reversals in the market in live cattle. We made new contract highs, then we ended lower. Are those reversals something that you're worried about at all, or do they not matter much here when you're in such a tight supply situation?
I think being a fundamentalist here and knowing that to increase the supply of cattle is a multi-year situation. I think when you make those new contract highs, it's not out of the question to see the market pull back. I think that one of the positives going forward that is supportive is as we move into May, you're getting into the grilling season. I really think with these tight supplies and consumers so far have not really rejected the higher price of beef. I think the market's just correcting, and we'll have a strong into May and into summer.
When do you think we're going to get into the tightest supplies in terms of numbers? And, we've hit with the cash market highs that we haven't seen since January of 2015. So does that cash market continue to methodically just move higher here through, the next few weeks and months?
What's really challenging for cattle producers, they're going to have to retain heifers at some point if we want to build a herd. Also, we've been thinning down the older cows out of the herd. So eventually, I don't know when producers will do it. It's going to be a difficult decision to say I'm going to hold those heifers back when you've got record high beef prices. But down the road, if we retain heifers, we will see a extremely tight fat cattle market, and I think that's not shown up yet, but someday it probably will.
Yeah, no doubt. It doesn't look like we've got that built quite all into the market yet. The hog market, again, like I said, any strength that we see in the market seems to be sold by the funds who are already are record short. I know you're a fundamentalist. Is there a fundamental reason for this? Is it the bigger slaughter numbers that keep pressing the cash market, or what is it?
Well, you do have bigger numbers. I think as we move into summer, though, those numbers decline if we get some more demand there. But the funds, just like wheat, they seem satisfied to come in and sell the hog market, and then they continue to be long the cattle market. So that scenario seems to be locked in place. One thing we know eventually about funds, they do reverse positions, and as much as they've shorted these two markets, when the rubber band expands too far, it snaps back pretty hard. We just haven't reached that point yet.
Okay. Thanks for joining us. Chuck Shelby with Risk Management Commodities, and that is Markets Now.